Last week I spoke to you about Jay Powell's presentation during the quarterly presentation of the Federal Reserve. And the great thing about the quarterly presentation is that you have the summary of economic projections, the outlook, that is provided by all of the members of the Open Market Committee plus all of the Fed presidents. But last week was unusual. Last week was unusual because even though Joe Powell knew what he was saying and knew that the Fed is not tightening monetary policy anytime soon, or not tightening monetary policy anytime in the forecast horizon, the data in the summary of economic projections managed to confuse many of the journalists who were participating in that presentation. And as a result of that, you got a very confused view that went forth into financial markets. And as a result of that, what you had in financial markets was a period, a pretty intense period of about half a week of risk off, in which there was a flight into US Treasury bonds, a flight into the US dollar, and therefore, because there was a flight into the US dollar, there was a sell-off in the euro, there was a sell-off in sterling, there was a sell-off in the Australian dollar, and the Australian dollar fell pretty rapidly through the previous support of the year. And as a result of that, a number of you, rather unsurprisingly, some rang me up and some sent me emails. But the question was do I still believe that the Australian dollar is going up? Now, what I want to look at this today in what I would call the old-timey way of talking about the Aussie dollar. In the quarterly presentation, what I do is I show, and I have for some years, shown the Aussie dollar and my forecast of the Aussie dollar by dealing with the Aussie dollar as a financial asset, purely as a financial asset. And that sort of process works for the euro, and it works for other currencies as well. And the advantage of that is it gives me a much further forecasted horizon. I can forecast what I think is going to happen to the Aussie dollar much further into the future. But there is an old-timey way of forecasting the Australian dollar, which is kind of perhaps more approachable if you want to show it to clients. And that is, in the old-timey way of talking about the Australian dollar and the Canadian dollar, is if they're commodity currencies and they're purely the result of movements in commodities. If commodities go up, the Aussie dollar goes up and the Canadian dollar goes up, and the reverse is the case. So what you can do, the great advantage of this is that if you're discussing it with clients in this way, you can go on the first day of every month to the Reserve Bank of Australia website and see their updated index of commodity prices, which looks like this. And what it shows is, on the front page, is it shows you the numbers. It shows you that commodity prices and Australian export commodity prices went up by 39.7% over the last year. And you can see the bulk commodity prices went up by 51.7% over the last year. So obviously, commodity prices are going up. And this is even more impressive if you look at the second page and you look at the chart of Australian export commodity prices, in which Australian commodity prices seem to be going up in the general direction of Alpha Centauri. Now, they're accelerating very, very rapidly. So what happens when you put that commodity model, or when you put that those commodity prices, which you can update every month from the Reserve Bank of Australia, and you put that into a model of the Aussie dollar? Well, firstly, there are other things as well that you would add to it, but that's overwhelmingly the most important thing in the equation. You can also add long-term Australian interest rates, long-term short-term, long-term US interest rates, and other interest rates as well. And the advantage of that is that part of the discussion about the Aussie dollar going up at the moment is the RBA is trying really, really hard to limit the rate in which the Australian dollar is going up, and it's doing it by buying Australian 10-year bonds. And Australian 10-year bonds are therefore not rising as fast relative to US bonds as they did in the previous cycle, and that reduces the path of the pace of rise of the Aussie dollar. And what I've said before, in modelling the Australian dollar in the old-timey way, what we do is we have commodity prices, but we also have relative interest rates. What we also have US interest rates and Australian interest rates. And the reason we do that is because the RBA is attempting to limit the pace in which the Aussie dollar rises by buying long-term bonds in Australia and keeping the relative interest rates lower. But what I've said previously about this, the result is that they can slow the path of the Aussie dollar going up, but they can't stop it. But what happens when we run this model with the most recent data, with today's, as I ran the model before I walked into this room this morning, so I've got today's US long-term interest rates, Australian long-term interest rates. I've got the most recent RBA information on what the or where commodity prices are. What does that tell us? Firstly, it tells us that we have a pretty good model. The model explains 88.8% of monthly variation in the Aussie dollar this century. So that's pretty good. And it's around about the same explanatory power of the financial market model that I show in the quarterly. But the point about it is that the fundamentals are easier to explain. And it gives you a really interesting fair value right now. It suggests that the fair value, given that rapid rise in commodity prices that we've had, the fair value for the Australian dollar is now 89.5 cents. And is in fact, on this monthly price is the cheapest monthly price this century of the Aussie dollar relative to underlying commodities. So to the answer to the question, which a number of you have asked me over the last week, do I believe I still believe the Australian dollar is going up? Yes, I do. Is there a simple way to explain this? Yes, I think there is, but I think it's really good to be able to show this to people, this index of commodity prices, which the RBA puts out every week, and the rapid pace it's going up. And it seems to be inevitable that sooner or later, the Aussie dollar will catch up with that very rapid rise in commodity prices.